Decentraland is at a critical phase right now and it's about to make a decision. It will either resume its uptrend and continue to make higher highs, or else it will go into a long and deep correction. So if you want to know which one of these scenarios has better chances, watch till the end. So for mana, I'll be looking at multiple time frames, and I'll start from the higher ones, which are the weekly and the monthly, because here there are two important highlights that will help us dig deeper into the chart later on and understand how the price is going to act next. The first and the most important highlight here is that we are still in an uptrend when it comes to mana's price. Because if we take a trend line and we draw a trend line for the price since the start of this structure, we can see that the price has been strictly adhering to this trend line and bouncing off it every time it came back for a retest. You can also notice here that we are still forming higher highs and higher lows since the beginning of this structure, because when we started here at this low, the initial impulse took us to form a high and then came back to form a higher low, higher than the previous one. And now we have already formed another higher high, which was higher than the one which was formed in April of this year. So on the bigger picture and on the higher time frame, we are still in an uptrend. Now the other important highlight on the weekly and on the monthly chart is that the price is currently in an overbought area. So on the weekly chart, the price is exhausted and starting to pull back. And even if we go to the monthly chart, we can see that the price has been in the overbought area since September of this year. Now the important highlight on this second point is that we are due for a correction right now, because the price is very exhausted and it needs to pull back to some point here and have a breathing space before it continues up further. Now if we take a look at the current structure of the chart on the weekly time frame, we can clearly see that we have already formed three waves in this structure. The initial impulse was this one, and the correction was this one, and now we're in the second impulse. After comparing the first and the second impulse to each other, I found that we don't have a divergence between this initial impulse and the second impulse. Now this means usually that we have a strong momentum and we have a higher possibilities to get a 5-wave structure instead of 3 waves. So if I draw how the structure is going to look like, this will be its initial impulse, and this will be the first correction, this will be the second impulse, and then we should get a second correction before getting the 5th wave of the structure and the last one. This specific scenario over here is aligning with the highlight from the indicator here that the price is already overbought and we shall be due for a pullback. We should get a pullback towards some point over here and continue going up further to form the 5th wave of the structure and complete the overall structure for Decentraland. And based on that, now we will move to the daily chart and look at the piece that's forming right now to see what kind of correction we might be getting and how deep it's going to go before it completes itself and resumes the uptrend further. Now on the daily chart, before I get down to analyzing this corrective piece that we have over here and understand what kind of correction we might be getting, I want you to notice how there is a similarity between the current structure that we have at this point and the previous structure that we had at the end of the initial impulse. Right before we ended the initial impulse of the structure, the price went to form a 3-wave running flat. That is a corrective pattern. Now you can clearly see how this pattern at the end of the first impulse is similar to this pattern that we have here at this point at the second impulse. The price has formed a long wick candle here at the end of the initial pattern, and we have a very similar candle here at the second structure. And right after that, it tried pulling up further from here and continuing its uptrend, but it failed to break the previous high, so it went into a deep and long correction. Now right here, I can see signs that the price is trying to repeat something similar to what happened at this point. So after forming the long wick candle, the price is trying to push up at this point. So if history is going to repeat itself in the second impulse similar to what we had in the first impulse, we'll see the price pulling down towards some point over here before it continues its uptrend. And we will consider this similarity between these two patterns as a third confirmation in addition to the initial two confirmations that we talked about on the weekly chart that are suggesting that we are likely to get a correction towards the downside next. So next, in order for me to analyze how far and how deep this correction could go, I'll start looking for key support and resistance areas. So looking at the chart over here, I can see that the initial support area that we have is right at this point. This one was tested first time after the price broke outside this level, and it came back for another retest at the long wick candle over here. But in case this level fails, we do have another support area that stands below this level and that was retested twice as well, and this level is right here. So this was acting as a resistance at the end of the initial impulse. So the first time it was retested here, and the second time was right at this point. So if the price fails to hold its ground right at this level before continuing up, we might see it pulling back towards this level, and that's the next strong support level which we have. Now it's hard to tell which one is stronger than the other right at this point, because each one of these two support levels have been retested twice. So in order to tell which one is stronger, we'll see which one of them has confluence with the Fibonacci retracement levels. And that's why I'll go ahead and draw the Fibonacci retracement levels for the second impulse of the structure. As you can see here, after drawing the Fibonacci retracement levels, both of these support levels have confluence with two different Fibonacci retracement levels. The first one is having confluence with the 618 Fibonacci retracement, and the second one is having confluence with the 0.786 Fibonacci retracement level. And so we can say here that both of these levels are still equally strong. And now I'll go ahead and forecast the upcoming scenarios based on these two different levels. Now the first scenario says if the 0.618 Fibonacci retracement level keeps holding the price right at these levels, so what we're going to get next is either a trend continuation from this point, or we'll see the price come down for another retest of this level, and then we'll see it continuing up right from this point. Now someone might ask here, how can I confirm that this scenario is the one that's going to happen? I will tell you that this scenario will only be confirmed once the price breaks above the previous high right at this point. So as soon as the price goes above these levels, we're going to confirm that the price has continued its uptrend first, and this scenario is the one that's in play. Because if we go back to the pattern I told you about earlier right at this point, you can see that the price has attempted to go and break above the previous high, but it failed to do it. So it came back once and twice, and then the correction started. So you won't be able to confirm this scenario unless the price goes above the previous high at this point and closes above it. Now moving to the second scenario says the 618 Fibonacci level is not going to hold the price, and the price is going to break below this level. So if this was the case, we'll see the price goes towards the next support level, which stands at the 0.786 Fibonacci retracement. That is about $1.63. Now if that happens, we might see some consolidation here near the bottom. So the price might go up and go down again until it comes to this level. And why this level? Because this is the strongest support at the 0.786, because it's a confluence of three different support points. The first one is the 786 Fibonacci level. The second one is the support line that we draw at the beginning of the analysis, and the third one is the trend line itself. So it will be very hard to break below these points right here. And so if the second scenario plays out, I expect the price to come down and retrace right from this point over here and then continue its uptrend. Now if you're wondering how can you tell when this scenario is confirmed, I will tell you that you need to look for a breakout below the previous low, similar to the confirmation that we had on the uptrend. So here we said that the first scenario will be confirmed only if the price breaks above this high. And for the second scenario, this scenario will be confirmed only if the price breaks below these lows and closes below them. So to make the long story short here, I'll remove everything and draw for you the two next levels that you only need to look at next. The initial level is here at the previous all-time high, and the second level is here. So these levels are going to confirm either one of the scenarios that we talked about earlier. So if the price ends up going and breaking above this previous high, then we're going to resume uptrend. But if the price fails to break this level and comes back here and breaks below this previous low, so we're going to have a long and deep correction before continuing our uptrend further. And with this, I can now tell you that this is all the technical details that we have on Decentraland as of this point. So please let me know your thoughts in the comments below and tell me what do you think. Also, if it's your first time in the channel and you happen to enjoy my video, please make sure to subscribe, smash the like button and share the video as well. This was it for today, and until next time, stay safe and see you later.